morning, good afternoon, good evening, and welcome to the Monday, 23rd of January, Bull versus Bear webinar. Steve Miley on the call for TradeDay.com. Welcome, everyone. We're going to go through our usual regular run through in here today, but with the slight change that we have on a Monday. I'm looking at that bigger picture shape of the week, plus the little look back of last week, recap of last week's outlook, look ahead to what we've got coming up for the week on the data front, on the macroeconomic, geopolitical, and central bank side. We'll take a look at that. Looking here at the weekly recap and outlook that I put out on the weekend that you can download from the traders members area in the same part as the research reports, the daily technical research reports. So please do take a look at that at some point if you want, but I'm going to run through it here anyway. We'll also look at, say, the earnings calendar. We'll take a look at the macroeconomic fundamental events that impact in markets going into today, and we'll also have a very quick, and it will be quick look, a more condensed look. I'm not going to go into huge detail on the charts in here today, just give an overall theme. I'm not going to delve into the more minute levels today. So let's take a look first of all at the macro side. So last week we had a switch really from the previous 2 weeks, the beginning of January. We had a lot of big macro events. So we had the Fed minutes, US employment report, and the US CPI data out the first 2 weeks through January. Last week, the data was a lot lighter. We'll talk about the data, but the data was a lot lighter on the macro side, but we had the earnings season kicking in. So kind of mixed on some of the earnings. Some of the we had an upbeat outlook from Morgan Stanley last week. Goldman Sachs was a biggish negative. Netflix was quite a big positive last week that pushed stocks higher at the end of the week on Friday, where even though the earnings estimates were missed, the new subscribers number, which is often seen as more significant and a bellwether for the US and global consumer, they were much higher than expected. And then we also had Alphabet, who, though haven't reported yet their earnings, the parent company of Google, Alphabet, announced a cut of 6% to its workforce, and that boosted Alphabet shares also on Friday. So we had a strong rally, primarily driven by Netflix through Alphabet in here on Friday. Data was fairly light. Main macro focus was Wednesday's retail sales, which missed analyst projections. That was a negative. But US PPI actually was better than lower than analyst expectations. Biggest drop on PPI, so that's input data inflation. Remember, in commodity kind of and input inflation, factory gate inflation as they call it, and that's the biggest drop since early in the pandemic. So that was kind of a positive for markets. Bank of Japan made no policy changes, and although they were expected to do so. So what was the net impact of that? Well, major US, European, and Asian stock indices were kind of mixed. Initial losses at the start of the week. And then a solid rebound at the very end of the week, obviously on Friday. Growth stocks outperformed with the lower yield moves that we saw last week, with the Nasdaq posting a third successive week of gains. US and European bond yields fell further, or did correct at the end of the week. US dollar index was weak all last week, was weakened further. It was sitting right on multi-month lows. Couldn't really gain any kind of recovery activity last week. It was more like marking time sideways against most FX pairs, with the dollar, but pushing to new multi-month lows in many places in here today so far. Gold pushed higher with that dollar weakness continuing, and so we have that as an ongoing theme. And then we also saw oil prices post a second week of strong gains, negating the early 2023 plunge, and copper prodded higher to build on the early 2023 surge. So generally speaking, we were kind of in a more of a marking time consolidation phase last week across the asset classes. Actually, if we look at bonds, yields, FX, pretty much sideways. Oil did go higher, notably though, something I'll come to shortly. The leap high that we saw the prior week in cryptocurrencies, the markets managed to hold on to those gains. They had a really strong gain on Friday, cryptocurrencies, and then gapped up at the weekend and stay strong going into today. So cryptocurrencies telling us we're kind of still in risk on mode, and also the dollar weakness we've seen today so far also telling me that we're still in risk on mode. Gold kind of marking time, oil nudging higher again here, going into this morning. So what have we got coming up for this week? Well, we have the Bank of Japan meeting minutes. They've already been released this morning. In here, no massive clues in here from them. The main focus from the macroeconomics on the central bank side, this week's going to be the Bank of Canada, although probably not going to make too much of an impact on markets we are looking at, but maybe give us some clues as to maybe the tone that we might be seeing from the Fed. Obviously, they're very, very independent of each other, but nevertheless, it might give us a little bit of clue of the tone of how central banks are shifting. So we should keep an eye on that. BOC, Bank of Canada, interest rate decision on Wednesday. What else do we have? Well, focus this week is going to be on the flash PMI data. We get them coming from late this evening from Asia, and then through to the US tomorrow. So that's going to be probably the flash PMI. Remember, this is from S&P Global. That data coming from this evening through tomorrow. We'll certainly be keeping an eye on that. We also, at the end of the week, so we're kind of waited towards the end of the week with the data. Tomorrow's flash PMI. It's fairly light on the US side. We do get that Bank of Canada interest rate decision, but light on Wednesday. We do get German IFO and Australian CPI, but probably not going to impact two markets on the markets your guys are looking at, and we're trading trade day. And then we have the US GDP and US PCE. Remember the PCE data, personal consumption expenditure, that is the Fed's preferred measure of inflation. So even though the markets tend to not react so much to that data, it is significant. So we do need to keep an eye on it. PCE, they kind of split that. I don't know why they quite split that with the month-on-month, quarter-on-quarter, and year-on-year data split across Thursday, Friday. The GDP, although it's a big piece of data, it never moves the market. And also get durable capital goods orders also on Thursday. On the earnings side, I've got the standouts here, but we'll have a quick look at them. Microsoft, Johnson & Johnson, Verizon, Texas Instruments, Tesla, ASML, IBM, Boeing, and Intel are the standouts. So if I go to the calendar in here, I'm not going to go through it all, but she says fairly light today in here. And sorry, the other thing to mention is Chinese Lunar New Year. Okay, it's a Chinese New Year celebration with markets closed for much of this week. So expect Asian markets to be relatively quiet this week. Okay, so just to point that out. We do get Christine Lagarde speaking later today, 12:45 Eastern time. Watching out for anything that might spur FX markets, but unlikely to impact the markets you guys are looking at. Might have a nudge into the European equity markets, but probably not. Earnings calendars, as I said, we've already run through those. Nothing of real note in here today. Big one really for the week is tomorrow's Microsoft. We also get Tesla on Wednesday. Those are both after the bell. Johnson & Johnson tomorrow as well. And then we do get ASML, AT&T, IBM, and then Boeing. Boeing's always a biggie because it has a big impact on the Dow, being a price-weighted index. So watching out for that on Wednesday. And then it's fairly lighter into the rest of the week on the earnings side. Visa, MasterCard, Intel on Thursday, Chevron, American Express on Friday. Okay, 5 things you need to start your day in here. Nothing really in here. I've already gone through this morning. I've looked through. Nothing huge. Citadel had a big profits last year. Spotify posting layoffs. ECB hawks coming out. So and Lagarde, as we said, speaking later today. Dollar slipping lower in here on the back of more dovish comments from Fed speakers that we had from the end of last week. So dollar and US stock struggles. Fed speaks sours mood. So this is highlighting that. So we did have, where is it in here? Where do they mention it? I can't see it. But we had, I think it was Walla, either at the end of last week or maybe it was even over the weekend, but indicating a shift to maybe, which is what the market's pricing in anyway, from the CME to only a quarter point hike in here. And if we go in here for February now, look, it's pretty much nailed on in here for a quarter point hike. Nothing even being priced in now for a 50 basis point hike. If anything, an outside chance of unchanged, but that's not going to happen. But I mean, it's nailed on at the next meeting now. Look, almost as close to 100% as we're really going to get. For a 25 basis point hike, but looking for that to continue for the meeting after that. Another 25 expected in the March meeting, and then we're consolidating there. So 475, 500, 50 up to that, up from here is what's expected right the way through. The summer on hold at 475 to 500 through September. and then by November, 450, 475. So looking for by November a 25 basis point rate cut, and then the market also pricing in, I think here, yep, back to 425, 450, which is where we are now. So looking for 2 rate cuts. So pretty much the market now staying the same. Looking for another 225s, hold through the summer, and then 225 cuts at the end of the year. So yeah, nothing really much from 5 things to start your day. The headlines not huge in here either. So dollar is slightly lower. US stocks mostly fairly flat in here. ECB staying more hawkish as the Fed kind of pivots to slightly more dovish. Oil nudging higher. Traders weigh China demand outlook and Russian supply. Obviously, we've got Asian markets closed, so that's not really helping the outlook for China. Though we did get data out of China saying up to 1.1 billion they think have had COVID, which is 80% of the population. So a huge number since, so a big number. So here's the hawkishness from the ECB. Need to deliver 2 more hikes of 50 basis points each. Remember, the ECB are way behind what the Fed have been doing. European things rise on economy optimism. Euro hitting a 9-month high. 9-month high in the euro, obviously being driven by that hawkishness from the ECB, and hopes that inflation could have passed its peak as well from Europe. Futures subdued this morning. Salesforce have rallied on a stake from Elliott. And then just noting the rises in Bitcoin that we've had. Bitcoin up. So this is from this is not from, it says 2.3%, but this is up from January 21st, this article. But if you look at the Bitcoin chart in here, significantly higher on Friday and then gapping up over the weekend, as did most of the cryptocurrencies. European stocks kind of fairly flat in here. DAX and CAC, the German and French indices, pretty much flat. FTSE, the UK index, up about a 0.25%. And if we go in here, for some reason, futures not updating in here. But we can go look at the charts anyway. So just a quick, here we go. Here's the chart. So fairly unchanged in here going this morning. Asia closed. It's been a fairly quiet start in here to the week. Sorry. And with no data, and, we've got kind of the earnings reports coming up. Obviously, Microsoft. We have obviously the data loaded to the back end of the week. We got that PMI data tomorrow. Expecting it to be, with Asia out as well, expecting it to be a fairly quiet day in here today. So more of a mean reversion day. So I'm not going to go into huge details in here. I think, the strength of the rebound that we saw on Friday really says to me that it's a big dismissal of, that this recovery that we've seen in here from the beginning of the year is reinforcing the whole recovery from October. That the sell-off that we saw Wednesday through Thursday was just a correction with the strength that we saw on the rebound, and that just to me points us back higher. So I think the risk is skewed to maybe new highs going into the day. Similar story in here for the Nasdaq, even a stronger performance by the Nasdaq, taking back, and actually was a high close for the Nasdaq. So real outperformance, as we've seen that lower yield moves continue. And if we go and take a look, quick nod to the bond market first of all. So we did get a drop to higher yields, lower prices in here on the bond market into the end of the week. But nevertheless, the underlying trend is higher in here. Potentially, no strong view in here on the bonds. Potentially bonds could dip a little bit lower in here before the next swing to the upside. Remember when you go and look at the oil market, I'm just going to close this tab down. Actually, it's already closed itself. But on oil now, we are on the March contract now on oil. So in here you see we have had. Sorry, 1 second. We've had a push back higher on oil. At the moment, if we close where we are, it's going to be a high close for the year. Highest closing point since middle of November. So really strong recovery in oil in here, still pointing higher. Looking for more upside for oil going into today. And if we take a look at gold finally, where are we? Gold. In here, high level consolidation in here for me. So it was a consolidation with an impulsive move higher on Thursday. Friday just marked time. Had a little bit of a dip and a rebound, but looking for further upside to come from gold. So tentatively bullish gold, oil, and stocks going into today. No strong view on the bond market from my side in here, but expecting a fairly quiet trading session given Asia's been out. We've got no big data coming up today. Earnings reports, what we've had is out, and there's nothing big on the earnings. And we've got a whole stream of earnings plus macro data coming through Tuesday and then Thursday, Friday from the US. So expecting the markets to probably be a bit of a mark time consolidation session today with a slight bias towards risk on. All right, guys, I'm going to wrap it up there and leave it there. I'm going to wish you all a great trading day. Please do stay safe, take care, and I'll be back with you with another Bull versus Bear webinar on Tuesday tomorrow. Bye.